Hi, Keith. Thanks for being with us today.
Craig, thanks for having me.
Keith, let's start with a brief overview of Piedmont Lithium and your lithium project in North Carolina.
Sure. So Piedmont is a public company. We're listed on NASDAQ. The ticker is PLL. We're also listed in Australia on the Australian exchange, also ticker PLL. Market cap's about $65 million. We're developing a large lithium hydroxide project in North Carolina, about 30 miles west of Charlotte, in what we call the cradle of the lithium industry. So all the lithium in the world came from this region 30 miles west of Charlotte in the 1950s to the 1980s. There's a prolific mineral belt there called the Carolina TinSpodumene Belt. We are developing a very large project in that belt, and the location is really ideal. We're surrounded by really first world infrastructure, obviously, a built-in first-class labor force, low-cost power of all descriptions, a great transportation infrastructure, and we're within a half a day's drive of most of the big automotive plants in the United States. So it's an ideal place to be producing lithium for the U.S. electric vehicle business that's growing as we speak.
Now, Keith, what's the essential value proposition? Why should investors take an interest in Piedmont Lithium today?
Really, I think three reasons. One, electrification of vehicles is happening. It's a mega trend. There's a lot of ways to play that. You can buy Tesla stock, or you can buy stock in a battery company or someone else in the supply chain. We think actually the most important value opportunity is really to look at the raw material suppliers, people like lithium producers. Lithium is the irreplaceable element in a battery. Battery demand is booming because of the movement to electric vehicles, and we're ideally positioned for that. We're a unique American project. We'll be a very low-cost producer in a very strategic location.
You guys hit a lot of milestones in 2019. Can you recap some of the key accomplishments of the past year?
Sure. We're a young company. The company was founded in 2016. The initial land packages were put together. And over the course of the first 2 or 3 years, it was obvious we had something. The real objective in 2019 was to demonstrate how big the project could be. So we did a lot of drilling. We had established a maiden resource in 2018. We did a lot of drilling in the first half of 2019 and have now established a very large resource, world-class, 28 million tons at 1.1% Li2O. That's the grade. And we took that bigger resource and updated the scoping study, which is really the economics surrounding our project. And we confirmed it will be a very low-cost producer. Based on our numbers, we'd be the lowest cost producer in the world of lithium hydroxide. And the NPV of the project was confirmed at over $1.4 billion at the scoping level. The other big accomplishment is late in the year, in late November, we received our Section 404 permit. That's the only federal permit we require for our mining operations. Huge milestone for any resource company in the U.S. We're very pleased to receive that. We have the only project in the U.S. that's permitted on that basis.
Keith, now how big is the market opportunity? And what type of competitive advantages does Piedmont have?
So the market's enormous. I mean, two of the biggest industries in the world are the automotive business and the oil business. They're all being disrupted meaningfully by electrification, by Tesla, by many others around the world. All the major OEMs are getting into this business. So from a raw materials perspective, to produce a battery, the irreplaceable element, that's a term that was coined by Volkswagen, who's moving full bore into electrification. The opportunity is just massive. I mean, the automotive business is a multi-trillion-dollar business. We're currently at 2% EV penetration globally. That number is growing dramatically each year. We were at 1% 2.5 years ago. Many people think we'll be at 10% by 2025. And I'm a Tesla driver. I would say we're all going to be going electric in the next 15, 20 years. These cars are smoother, quieter, faster. They're far less expensive to operate. They're going to become far less expensive to buy as battery costs continue to fall. So the opportunity is vast. It truly is a mega trend.
What milestones can investors expect in 2020?
This is another big year. A year from now, we hope to be essentially beginning construction. So along the way in February, we'll announce some important metallurgical test work results. This is important to prove that we can produce battery quality lithium hydroxide. Hydroxide is the form of lithium that is used in Tesla batteries, et cetera, and others. There's no reason to believe we won't be able to do that, but it's an important process to go through. So we're going through that test work now. We'll have results at the end of February. We should also announce a pre-feasibility study for our chemical plant by the end of April. That'll really cement the economics around that. Sometime in the middle of the year, we hope to have put in place two or more important offtake agreements with potential customers. They could be car companies, could be battery companies, could be cathode manufacturers. We're in touch with a number of participants in the industry around the world. Everyone's interested in U.S. supply, so we expect to be able to receive that. And then we hope to close the year with a full definitive feasibility study for the entire project, basically a bankable feasibility study by December. So it's a big year, and we'll be ready to finance and build the project by the end of that.
To recap, Keith, what's the main takeaway for investors?
I guess the main takeaways are, number one, electrification in the car business is a mega trend. It's happening. People should be focused on it. I think the best way to play it is to look at raw material producers and potential suppliers. We have the only conventional American lithium project. Lithium is crucial to this whole mega trend. We'll be a very low-cost producer. Most of the lithium in the world comes from remote regions in the Andes or in Western Australia, over 90% from those two regions. 2/3 of the lithium in the world is processed in China. That's fine, but again, people are looking for non-Chinese sources of supply. We're located in an ideal place, 30 miles west of Charlotte, within an easy half a day's drive of over a dozen automotive assembly plants, all of which will go electric, in my view, over time. So and the stock is cheap. I mean, I think our stock is undervalued relative to competitors in other parts of the world. And lithium had a difficult 2018 and 2019 as a new supply came online. That's a temporary blip, I believe, but equities have really been discounting that news, and I think there's a really strong bull market coming.
Sounds compelling, Keith. Thanks for being with us today.
Thanks for having me. I enjoyed it.